some of the basic cornerstones, the basic tenets of all trading that we do. And that is all the concept, simple concept of relative value analysis. When we look at a relative value period on the screens, this is just index arbitrage, right? So this is just an index arbitrage. The one thing you'll see, like any other index arbitrage or any other relative value arbitrage that we do, the bubble forms. The bubble forms to give us an idea that value is forming. Now, what we've said before about these types of ideas is very, very straightforward. When the bubble forms and an index arbitrage shows up, there's going to be a big queue to take advantage of that bubble. A big queue to take advantage of the bubble, right? So when we think about the big queue, you can't see it on this chart, can you? You can just see the bubbles. So what do we mean there's got to be a big queue to take advantage of the bubble? Well, we would normally expect that in most normal cases, there'd be a big increase in volumes. So when we look at an aggregation, take a look at where the aggregations take place on this chart. Is there anything that stands out just on those aggregations themselves, just on those ones? Is there anything that stands out? Sure. There's a few things that start to stand out, isn't there? The idea of the location of where the black line is in relation to everything else. The idea of where the black line is. Take a look at every single one of the green aggregations. Do you see what happens on every green aggregation? Do you recognize that every time the green aggregation takes place, the black line is actually into a brand new fresh high? Do you see that? So it's into a brand new fresh high right there. It's into a brand new fresh high right there. And it's into a brand new fresh high in this series in here, isn't it? And what happened to price? Price rallied, price rallied, price rallied. Three aggregations, all taking place not because of breaks of lows, although one of them was a break of a low. This middle one was a break of a low. This wasn't a break of a low. This had plenty of previous lows to break. And what we can actually start recognizing is we can start recognizing that these aggregations are because of value. Do these aggregations create value? No, they're because of value, aren't they? They've got to be because of value. So when we see that aggregation coming in here, and you can see the black lines punching the lows, and you say, right, there's an opportunity, and you start saying, right, it's probably almost definitely going to be a sell trade coming in because I can see that aggregation. And then they come back in again at exactly the same price, and you see that results in that brilliant sell-off. We see this aggregation coming in just here, and we can see again the black line is at the lows. And again, you can see it's not anything particular except for that big old sell candle. And you can see the trade idea developing. And you see how beautiful the trade develops, isn't it? Two sells that made money, a buy that made money, a sell that made money, a buy that made money, a buy that made money. 1, 2, 3, 4, 5 trades in a row, all making relatively straightforward money with a bit of value and a bit of volume. Bit of value and a bit of volume. You know, and that's what you're recognizing. Not every black line comes back to give us a big aggregation, does it? You know, we can see that there's several black lines at low prices that doesn't give us anything. You know, here, there's nothing of any particular importance. The black line's at the bottom edge here. You can see that there was a sell came in and it would have made money, but there was no aggregation on it. And as I said, it's not about necessarily that every aggregation is a trade. It's got to stand out. The black line and the blue line, see how that one's coming back from the highs into a low? You might be saying, but surely that was an aggregation and it never actually developed into anything. But that's because the switch hasn't actually taken place yet. It's still coming back from the highs. As you move up into the top edges, you can see that sometimes this is what happens. You can see there's no bubble forming here. See how it's a parallel shift? You see the difference? Parallel shift. That's not a bubble that's forming. That's a drive. That's called a parallel shifting market there in terms of relative value. That's not value. That'll never be value. Value is a bubble. There's a big difference between something that's moving and aggregating and something that's bubbling and aggregating. So when you see this one starts to bubble, see the difference between a bubble? When this top line starts to bubble and you start seeing aggregation coming in into the top line, you know that there's a high probability that that's going to rotate back into that short sell as you'd have expected. A bubble forms into the high. Not a straight line aggregation, not a straight line of aggregation candles. So when we start to recognize the difference, we can start to spot some of the main obvious components. The idea is that it's not just about the black line at highs. It's about the shape of the overall developing storyline. Is the blue line starting to peel away from the red line? Are we starting to see the bubble forming right across the spectrum? You know, can we get the right storyline at the right time? You can see that the bubble kind of parallel shifted that most of that whole move. Kind of parallel shifted, but you see what happened in here. The bubble flipped over, started to find that real money bubble narrative. You can see it slowly but surely building, and obviously you can start to recognize. Now there's some arbitrage elements that we can add into this as a storyline. You know, obviously the idea of which direction is the market going in the first place, can we take advantage of that as a directional bet, and so on and so on. But you'll see that all these aggregations have something in common. They also have, in most cases, a developing storyline with value narratives. I mean, if you look at that, obviously right there, there's an enormous change in something happening in here, isn't there? The black line goes straight down, everything else goes straight up. And you're going to be looking at that saying, is there going to be a sell coming in here? Boom. Is it good? Well, it gets better. It gets better, doesn't it? Here's a classic bubble. You can see the relationship between the blue line and everything else is actually bubbling. That's a classic arbitrage buy trade. It's not the black line that's isolated like this, because obviously that black line being isolated is just the black line being isolated. Everything's bubbling here from the blue line. Everything is bubbling from the blue line. That is my particular favorite buy trade for equities right there. Was it a great buy trade? It wasn't too shabby, was it? It wasn't too shabby. I've seen worse. But the whole storyline, to me, that's the kind of one trade a day that I definitely want to be on. And obviously the takeaway from that buy trade was pretty damn good. You can see that the blue line, red line, blue line, that's the only one that those three separate during that whole period. That's what I mean about a bubble. A bubble's not necessarily formed by one single line. It's formed by a series of lines, with the pivot being the red line. So here, for example, you can see the pivot being the red line is in the middle. So that's a reasonable sell, isn't it? Reasonable sell with an aggregation. So you can see that that reasonable sell there, it didn't exactly make earth-shattering sums of money. It sold off 59s, traded a low price of 57 3/4 for a point. It's not exactly going to make the earth spin on its axis, is it? You get the basic idea. It's a good one, but it's not brilliant. When we see bubbles forming in here, you can see that there's a buy trade setting up, big style. Why? You see the red line goes flat. The red line's going flat, so the minimum threshold for the buy trade setting up. The big volume is in. We know there's a buy trade coming up, and obviously we're starting to see it on that candle. It pins against us. We've got to have confidence to keep working that 3-tick drawdown, and then it goes beautifully away from that aggregation. Again, the minimum threshold of getting the red line starting to work in your favor. So you start watching for these. You can see here's an example of a buy trade. Do you see it? See how the red line as a minimum is now going in the opposite direction to the black line? There's a very good looking buy. That's better than this buy trade here. This buy trade here is a better example of a buy trade, isn't it? Right there. That's a better example of a buy trade because the minimum threshold has been met and it's a wee bit better than the minimum. And what happens? Boom, we get the data release. On the data release, you can see the red line is straight up, so that's not going to be a sell. You can see that that's simply just a profit take with 2 of the 5 coming back into the sell. 2 of the 5 coming into the sell. So that's a profit take candle. So you can see it was right. You can see it continue to go higher, and that allowed you to make, you'll hold on to your positions and allow you to take a better decision at a slightly higher print. When we see this one here, you can see there's a buy trade setting up. The red line is now making the minimum requirement on that candle right there. Do you see it? The grey line's actually falling. So we've actually got way better than the minimum requirement, haven't we? So this is a buy trade off 59 evens. This is a reasonably strong second tier buy trade right there. So this is a 3rd tier buy trade. This is a 2nd tier buy trade, and the original trade that we showed you earlier on, that was a 1st tier. That was a top tier buy trade. So this is a middle tier buy trade. It's a good quality buy trade. Did it work out? Well, made you money. You know, ultimately it doesn't determine whether it's going to be massively successful, but we did get an add-in, a 2nd tier add-in just there. The red line is dropping. So we got a 2nd tier add-in just in there, and we obviously decided to get involved again into that buy trade, and obviously the takeaway from that buy trade, not too shabby. Again, watching the red line for any type of divergence. We start seeing the red line peeling off just in here, and that tells us that we could be possibly looking to sell into the highs, or alternatively just bank our money. Don't like this one. Aggregation coming in, that looks like a big profit take to me, and obviously that was right because the price continued to edge just ever so slightly higher again through those phases. We get a bit of a problem child in here. Grey black line divergences, could be a single line bubble. I don't really like getting involved in single line bubbles, and I'm happy just to let it be. Let it be. Into this, looks like a top edge starting to form. You can see the blue line's the line that's isolated now. That's usually a solid signal to start working the offers when the blue line's isolated like that. So that's usually a very strong signal to start getting involved in that as a bit of sell-side business into those high prices. And it decided to start rotating away from those edges, which was pretty good. Nice little easy money call on the short sell. It is what it is. You know, it's one of those kind of trade ideas that you develop out your ideas, you develop out your lines, you think about how much you need as a minimum threshold to build into your business plan, and then you execute. Just execute.